Hi there, traders. This is Brad Gilbert with the FX Market Insight for Wednesday, the 5th of June. All right, as we come into the Asian session, there's a clear defining sort of setup at the moment. We've got normal liquidity back in the market. Okay, everything seems to have settled down quite nicely. What we do have is US dollar weakness across the board. Now, I thought yesterday, I know it was breaking a few major trend lines, but the US dollar move would be one of those flash in the pan jobbies. But at the moment, the market's consolidating down here. Look like they're ready for another push. So we are starting to see clear US dollar direction. Now, the only thing that is a little bit odd is Brexit. So sterling seems to be, even though on the hourlies it's rallying, these other pairs, in particular Euro, Aussie and Kiwi, these are the pairs that have had fundamental downward outlooks, and they still do. But you know what? The dollar direction is dominating these and taking them out. And we could see a significant rally here across the board, across these pairs. We do have the ECB coming up tomorrow, and then the non-farm payrolls Friday. If the US non-farm payrolls are weak, everything's going to change, right? And these Euro, Aussie, and Kiwi will be 150 points higher at least, right? So I can see pretty big potential in the market coming up to for today's trading. And it's, you know, and the best trading opportunities are often outside the very high impacting events. Of course, we've got these things to probably thank for the US dollar weakness, particularly the trade issues with that Trump is sort of drumming up. It's really creating a negative stir in the US and really almost forcing the hand of the Fed, who are now starting to sort of talk, or there's rumblings across the Fed about potential changes of policy and all sorts of things. So we'll have to see how that plays out, whether that's just the media whipping up a storm. It's usually typical of that. But what I'm seeing in the charts is a big change here, and we could start to see a big bounce. Now, dollar yen, it's just starting to trade sideways, which you would think it's either have another leg lower or it's going to wait for more tensions to build. But euro, I mean, it will wait. Euro will wait for the ECB. I don't think we'll see it pop, but and then you've got sterling sort of trading sideways, of course, just drifting up with the other currencies. But dollar CAD also a clear sign. US dollar weakness is dominating, especially with oil now back at $53 a barrel. This is quite interesting as we roll forward. Now, just coming back to today's trading. Now, focus very closely. Now, of course, on the major data, we've only got the data that you need to be flat for. Right? And that's the ECB tomorrow. Okay, that's great for tomorrow, but what about what have we got today? Now, we've got a great opportunity coming up, and I want to get this video online before it actually comes out. Aussie GDP. Now, here's the range of the data. If it's above 0.6 or above 2.4, okay, or even above these two forecast numbers for that matter, we should see the Aussie pop above 70 cents, and we could see that run up towards 71 or 70.5, 71. I think that's where the major focus is. If the numbers come out a little bit weaker, we'll see the Aussie drift off, but it's going against that short-term trend, and I think that isn't the trade. The trade here is an unexpected strong number, you know, and the likelihood of that is, well, it's pretty thin because, you know, a lot of the data out of Australia, the CPI, a lot of the numbers have been weak. So GDP you'd think would be weak. The danger is it's strong, and we see this thing pop, and we see the market get totally squeezed out of their short positions. For those traders who are short, there is a chance here that this number could come in weaker. You want it weaker than these numbers, in particular, weaker than these two, and you will start to see the Aussie come off, and they will start to almost factor in another rate cut pretty soon, right? So this is where it is. It's right in the balance. Strong numbers, we'll see it squeeze to the top side. Really weak, and we'll see it start to tumble because, you know, it has ramifications for potential rate cuts down the track. In saying that, you know, they have cut rates, so they'll say we'll cut rates because we know the GDP was going to be weak. But anyway, we'll see how that plays out. That's the major data that you'll be looking for in the Asian session. You come through the European session. We got some PMI numbers there to have a bit of a look at, some European and UK ones. I mean, once again, trading the UK fundamentals is a little bit rough at this stage. The ISM non-manufacturing numbers, if I can get this out, key number for the US market. So have a look. You know, we're starting to look for to numbers we can get some momentum. Don't forget the US dollar is on its well, not really on its knees just yet, but we're getting closer, and weaker numbers working with the current theme of the current moves in the currencies. And this is where we'll see them run, because you know what? Especially the Aussie, Euro and Kiwi, there's not a lot of resistance around. So these things have got room to move 100 points, in my mind, before we start to see some sort of resistance. So that's where the risk is in the market. So focus on that. It should give you something to really get your teeth into. All right, guys, we'll catch you in the 247 trade zone. That Aussie data's out very shortly. Cheerio.